Good day, traders. Hope you guys are good and welcome to this week's segment of our weekly market breakdowns. Without wasting any time, let's get straight into it. We're going to start by looking at EURUSD, and I want to start at the monthly as I believe it will give us the full picture of what's happening in the market. So as you can see right here, we're in a clear downtrend where highs are continuously respected, but the market continues to continues to break the lows, right? Our most significant low was this one right here, and we had a failure swing. Failure swing meaning we didn't break below that low to continue the downtrend. Does it mean that we're in a point where the trend is reversing? Not necessarily. Why? Because the uptrend is still intact, right? If we look towards the downside, we have two fair value gaps. The first one being this one, and the second one being this one. This means there's a hidden order block somewhere here, maybe on the weekly or on the daily. And then there's this imbalance over here. And the source of that imbalance, aka the demand zone, is this one right here. So based on this, we can make the assumption that over a couple of months, even years, the trend of this EURUSD is still bearish, right? Right now, though, we're in a period where if you look at this downtrend and the nature of this downtrend, you can easily draw the conclusion that we're in the correction phase of this downtrend because we had the strong push to the downside, this corrective period, strong push, and now we're in the corrective phase. So for us to continue with the downtrend, what should we do? We need to violate these lows and create new lows, right? As you can see right here, there was a failure swing and also a failure swing right here. So I just want to zoom in into this thing. Right. So from what we are gathering right now, there are two possibilities. Possibility number one, we are bullish in the short run and continue with this downtrend in the sense that we create a sort of I forgot the name. Is it called an expansion or something? But it's a corrective pattern, right? Right? Either we form this pattern or we get a breakthrough and then continue to the downside. Those are the two scenarios that I see right now on EURUSD and on the monthly, right? So what else should we be considering? Let's look at the zone that we're currently on right now, which is the zone right here. And let's analyze the basing candlesticks of the zone right here. It has a wiki base, right? Which makes it a zone that's not really strong, right? A wiki base for me signifies the fact that even though we might get a reaction, but in the near future, in the foreseeable future, we might have to expect that the market will break through it eventually. Get what I mean? Because we're looking for clean bases where there hasn't been a lot of price action. Another zone that we need to break through is this one right here. It is the zone that's currently in control right now. And I always say that a zone being in control and a zone being tradable are two different situations. Now, what's so wrong about this zone, right? And apart from the fact that we've got only one retest, meaning that it's still a good area to be trading from, well, we've got a lot of basing candlesticks on the zone. That's my only problem. But we can't trade against the zone until we can fully break through the zone. So until we can fully get to a point where price is here, let me do this. Until we can get to a point where price is here, if price can't break below this floor, then we can't trade sells, right? Even though we see them on a lower time frame, but the idea is that on a higher time frame, the demand zone is in control, right? Also consider the fact that we have a third touch on this trend line. Can we see where this narrative is leading us to? Is leading us to the first scenario, right? That we might get a push to the upside before we get a drop. You get what I mean? But that's just my sentiment. Right. If we go to a lower time frame, we can see that we had this gap right here, and we've recently filled it. And where's the source of that gap? This right here. It's a zone that's nested within the higher time frame demand zone. So it's a fresh zone that it's a fresh zone that's nested within the higher time frame demand zone, which makes it a higher probability zone, right? If we zoom in a bit, you'll also see that we have this area of liquidity, and then we have the zone that we haven't really taken out, right? So we still have this distance to travel. We don't have a gap until we reach that point. You get what I mean? So because higher time frame zones are in control, on lower time frames, I want to see a change of character, right? I want to see the market breaking previous structure on lower time frame trends, and also a strong impulsive move to the upside. So what are we seeing on the daily? On the daily, this is what I see. I see that there's still a gap right here, right? And I see that there's been a failure swing right here, meaning the market failed to break below this low right here. Now we're waiting for a break of structure above this high, of which we kind of got, but it's not really the confirmation that we needed, right? We broke this high from this high, but we're not in a stage where we have a strong breakout from this day, right? But higher time frames demand is in control. So what I think will happen is that I think we will either find ourselves dropping temporarily to the downside, creating liquidity and even maybe taking out this liquidity right here, and then going up, right? Or we can simply just break this and then continue to the upside. But we need a strong impulsive candlestick, right? Let's go to the 4 hour. So now when you go to the 4 hour, this thing becomes much more clear, right? We had a change of character here, and then the market went up, right? Created a new high. So there's been a change of sentiment. We came back, created this low, also taking out some of the orders that were left here. And then we went up again, right? Taking out this high, and now we've come back at this point right here, and then we've closed off with this sort of indecision. So what I'm looking for, like I said, is a break above this area right here. So let me just highlight it, because we've been creating new highs. You get what I mean? And we've taken out this high over here. We've actually grabbed liquidity from that high and then went back. Or conversely, we can take out this liquidity right here. After taking out that liquidity, maybe we'll see the movement to the upside. But yeah, guys, those are my sentiments on EURUSD. Let's go to the dollar index to see what's actually happening. So on the dollar index, if you checked out last week's analysis, we're expecting the inverse of what we see on EURUSD. As you can see right here, the monthly supply is in control, the weekly supply is in control, and price, as we mentioned, is making its way to the downside. You know what I mean? And as you can see last week, we got that bearish close on the weekly. But what is happening on the daily? On the daily, we had a failure swing, and we're at a point where we're waiting for a break below the structure over here. If we get a break below the structure over here, and then it will confirm our bias. And then there's this area of liquidity, right? And then maybe that will be our first take profit. But also we have an imbalance over here and a zone that hasn't been tested. So maybe price will go all the way to this level right here. That's just me thinking out loud. But weekly supply is in control, monthly supply is in control. Even though this is still an uptrend, you don't want to be trading against higher time frames. So what we're waiting for also on the lower time frame is just a break of structure. So yeah, that's my sentiment on EURUSD and Euro, on EURUSD and the dollar index. Let's move on to other pairs. All right. So now we are on the USDJPY. And as you can see, we are in this clear bullish uptrend, right? The phase that we are in right now is the impulsive phase. So this impulsive phase has resulted or has come after we've gotten a strong break of structure from this equal highs right here. And from every impulsive move or from every breakout of structure, what we're expecting is for the market to at least return to an order block. So what I'm expecting in the coming weeks is I'm expecting the market to give us a consolidation away before actually dropping. Take out this zone and then maybe continue with the trend, right? But currently I'm at a point where I'm waiting for the market to return to an order block. You get what I mean? We've also seen that we've taken out this area of liquidity right here. We are at a point where we are on a weekly supply. So we're in a supplier's territory. So is the market going to respect this area of supply and then drop to the downside? We'll find out next week. I want us to go to the daily. Right. On the daily, I just wanted to zoom in and go to the left. To the left, you can see that we have this strong imbalance that hasn't really been taken out. And we also have this other imbalance. We also have this other imbalance over here. And the source of that strong drop to the downside is this zone right here, which I believe we'll see when we go to the right. So I don't necessarily believe that the market might go all the way here, but if we're looking for a sweet spot where we can get a good entry, is definitely that zone right here. So I think the market will still make its way to the upside and then give us a drop, at least until this point. If we place a limit order there, what's going to be our ROI? But yeah, man, this is what I see on USDJPY. Let's move on to another pair. Right. Looking at CADJPY, we got that strong impulsive candlestick that we've been longing for. I want us to start the monthly, just so we know what to look forward to. Right? We have this imbalance right here. We have an imbalance right here. Then we have a hidden order block right here, because on this area right here, there is no imbalance. This imbalance right here has been filled with this strong candlestick, and the market's currently going into this torus right here. But the strong supply zone is right here. Remember, order blocks or supply zones vary by how strong they are, right? This type of supply zone is much more stronger than a hidden order block, right? This does not necessarily mean that we need to ignore that supply zone. What we need to wait for, though, is for the market to take it out before we can actually buy. It means right now we're not at a liberty of buying, right? So let's go to the weekly. On the weekly, we can see that going into that hidden supply zone, we have this mini induction right here, right? Where we have this touch, we have this touch, and the market is currently coming into the zone with this third touch. I'm going to change the color of this so we don't confuse the zones. Right. Do you see the supply right here? It's not a really strong supply because it has a lot of basic candlesticks, but you get the picture. It has a strong departure. It's a continuation pattern, or it's a continuation supply, right? And then where's the opposing demand? The opposing demand that I see that is valid is actually this one, right? So it means for me personally, I see opportunities for us to drop to the downside, all right? Obviously, I like to take profit at areas of liquidity. So for me, an area of liquidity is this one. I don't like waiting for the market to go all the way to that level, right? But this is what I see. We have incentive to go to the lower or to go down. Why? Because we have created a gap right here. It's not a high probability trade. Why? Because it's counter trend, but it's what we're seeing. We have a recent break of structure from this right here, from this level right here, and also this level over here. So we've left a footprint right here. We have a gap right here. We have a gap right here. And those gaps create incentive for the market to come back. So the first daily level is this one right here that the market might actually take out. But if you consider the supply and demand curve, you realize that another area where we might get potential opportunities is actually this one, right? But we also have a gap right here. So the high probability zone is actually this one. And another thing that's good about this zone right here is the fact that it's, and I'll write these points down. It's aligned with the main time frame or the main trend. It's fresh, hasn't been tested, and also it's nested within a high time frame zone. So these are the three things that makes the zone a good zone to probably trade from. And then you also consider other factors that we have liquidity right here. But yeah, the market still has to break through the zone and this one before we can actually consider buying from this one. If I do get a sell opportunity, I'm actually looking to sell until this point. This is where I'm taking my profit, right? If it moves past the zone, then I'm only buying from the zone. But yeah, if you want to know more about how to know where you should be exiting, like knowing where big money is probably gonna go outside of a trend or take their profit, those kinds of things, then it will be to your own advantage to look at this the video that I recorded on the supply and demand curve. But yeah, man, these are my sentiments on CADJPY. Let's move on to another pair. All right, now we are on NZDCHF, and this is an update because in the previous weeks we spoke about it. The only problem is that we didn't get the setup that we were looking for, so the market left without us, right? I was expecting a retest to this order block, but then the market created this corrective pattern and then moved past it. So I just want us to go back to the higher time frames just to get a sense of where we are currently. Right. Currently, like where we at, supply is in control. The monthly supply is in control. Right. Do I believe that, like, is this the ultimate trend? Not really. I genuinely believe that long term should be going up, right? But that does not necessarily mean that we need to ignore these zones. We have this low over here, that's still the area of liquidity, and we formed this mini demand zone. So for this mini demand zone to be confirmed, we actually need a breakout from this supply zone that we are at, and then we can come back, retest, and then go to the upside. But right now, supply is in control, and whatever buys that I'm giving that buyers having that in mind. So if you look at the lower time frames, we had this huge gap right here. We had this huge gap right here going into that supply zone, right? And where's the source of that huge gap? This order block right here. And I'm expecting some kind of reaction from that supply zone. And then where am I going to take profit? I'll look at the daily, to be honest. On the daily, we have areas of liquidity. These higher lows, get what I mean? But a zone where I'm most likely going to take profit is actually this one right here, the one that I thought the market was going to reverse from. That's where I'm going to take my profit. Currently, the market stuck in between the zone, and I'm waiting for a break out below before I can trade. You can see this from a lower time frame point of view, right? If you watch my video on how to properly analyze or trade or read market behavior, you'll understand. So I'm waiting for a break out below this zone, some form of a retest with a wick. First take profit, and then second take profit. But yeah, this is all I have for you guys. If you watched till this point, thank you for watching, and I'll see you again in another video. For now, peace.